Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be talking about AMC and why it is still set up for a huge short and gamma squeeze. So we're taking a look at S3 Partners, who has the most accurate short interest data. They are a data company, and Robert Sloan, who is the founder of S3 Partners, had an interview today with Bloomberg. So we are going to be watching that interview and I'm going to be telling you guys my thoughts on what is to occur. If you guys would like to get up to $50 in free stock just for signing up, sign up with the link below. To public, you get up to $50 in free stock just for signing up. So it's basically free money. And yeah, that's that. Make sure you guys like the video if you haven't already. It's the #1 thing you guys can do to help me. And yeah, without further ado, let's get right into the video. Alright, so let's get right into this video.
Let's talk first about the revitalized jump in these meme stocks that we saw. It was really amazing to watch last week. Was it what we saw in AMC, a so-called gamma squeeze?
Oh, that certainly has something to do with it. There's so much flow of derivatives happening right now. And, you know, the dealers or people that sell and write these options have to hedge their positions, and that definitely caused some of the price move, no question about it.
So he's basically describing what is a gamma squeeze. That basically means that the stock price has risen so high that every single call option is now in the money. So whoever sold that call option has to hedge their shares. They have to be delta neutral with that call option. So when the share price goes up, the gamma value goes up, and in result the delta value goes up, and the market maker, the person who sold the shares, needs more shares, which causes an infinite feedback loop, which is called a gamma squeeze.
So what are the stocks? Is AMC still among the stocks that are incredibly highly shorted that you track at S3 Partners?
Yeah, so if you look at our squeeze risk score, it's still a 100 out of 100. If you look at the total size of the position, it's $3.6 billion. The total year-to-date loss is about $3.9 billion. And last week alone, shorts in AMC lost $2 billion in 1 week.
$2 billion in 1 week. That's absolutely insane.
Unbelievable. Bob, you and I have talked about how short investors can get these stocks. Sometimes it's over 100%, which means that either borrowers are re-lending the stock that they borrowed to short. Right. Somehow that seems implausible, or people are going short naked. And I see today on Twitter, naked shorts, naked shorting is trending. I'm not sure if that's just because people like the word naked. Is that still happening? Is it still prevalent in this market?
So I just want to jump in here real quick. So what naked short selling is first of all, it's an illegal activity. It's been banned from the SEC. However, it still does happen, and only market makers can really do a naked short position because they are the one issuing these securities. A hedge fund can't really naked short sell, but there are some cases where the hedge fund is the market maker, and that is with Citadel Securities, who owns Melvin Capital, who was very short on GameStop originally, and there are other hedge funds doing this as well. But Citadel is definitely the main enemy of the retail investor right now. And what naked short selling basically is when you sell a stock short, you need to borrow that stock from someone else in order to sell it. And naked short selling is when you sell the stock when you don't even own the stock, and that's why it's illegal, because you didn't even borrow it. You literally sold a stock that doesn't even exist.
Well, first of all, you know, if someone is doing naked shorting in a large scale,
short squeeze,
scalable, systematic strategy, you know, the gendarmes should come in and just take that person or firm, you know, off the field. You know, it's against the law, and it shouldn't be done. So, you know, it would be, you know, that's where we come out on it. It's just not done. The rules and regulations are very clear about what should be happen to players that do that.
So he's basically saying that this naked short selling does not actually happen. However, there still are some cases where the entire float is shorted over 140%, which means new shares had to have been issued in order to do this. Well, there is a way around this, and that is when you lend out shares more than once.
On the other hand, I guess it's probably legal. If you borrow the stock from somebody, Bob, and sell it to me, I can turn around and lend it to someone else.
And that's basically what he's
who
trying
sells
to
it short
right
again.
Now,
so
is
really that how we get companies that are 120, 130% shorted?
Well, in your example, what's happened is that you've increased the float of the company. So it's really that you have 2 long positions for every 1 short sale. And that's really what confuses people. There's a lot of confusion in the marketplace about what is an actual short sale. So for example, a long agency sale is marked
CCIV,
as a short sale, and it's not. So if a mutual fund or any investor that is long a stock sells it and the executing broker does not have that stock in its position, in its inventory, and then sells that on to the marketplace, that's considered a short sale. So there's a lot of confusion of how things are marked. That's one of the reasons why we've created on Bloomberg a IB chat room, IB space plus S3, because there's just so much confusion with the gamma hedging going on, with all these mismarking of positions, with all this talk of naked shorting. A lot of institutional investors, hedge funds, and individuals that we service in our AMA on Twitter, we thought we'd bring the same AMA to the Bloomberg universe, and we're happy to answer any of those questions.
One of the most frequent questions you probably get asked then is which stocks are ripe for a gamma squeeze, right? And I know you've done a ton of research. You recently came out with a white paper showing the most squeezable, stocks.
This is why AMC still has room to run,
Has
guys.
the list stayed roughly the same over the past few weeks, Bob?
It's somewhat the same. Nikola, Blink, some of the SPAC stocks as they start trading definitely have high squeeze interest. AMC and GME are still at 100. That's also one of the reasons why on the SI Go page on the Bloomberg terminal, we will be making access to our squeeze risk score so that everyone in the marketplace, when the exchange number is released, you'll be able to see our squeeze risk score, because these things are like rogue waves. You don't see them coming until they hit you, and when they hit you, they destabilize everything. And one of the things that's interesting about what's happening right now.
Okay, that is very, very interesting, because he makes it sound like this squeeze has not even happened yet. They're like rogue waves, and they hit you all at once. Well, this has been building up for, like a few months now. It started in February with GameStop. Now it's AMC, and they're both still at a 100 score, according to S3 Partners. And he says it's going to hit you all at once, implying that it has not yet happened.
You see non-standard players do standard things. We saw Mudra Capital do a secondary. Why? The traditional players didn't want to, didn't like the risk. That's all these things are happening, and it's telling you that even though the dogma is the company has to issue every last share it has to pay off its debt and it's worth zero, given what's happening in the marketplace, these things can probably go on and on and on. If non-traditional players take the place of traditional players, there's really no end in sight in how high these stocks can go.
So what he's basically saying is if retail investors, if Wall Street bets, if Reddit gets enough money, basically enough money to compete with the hedge funds who basically control all the money supply right now, basically control these markets. They have historically invested based off fundamentals alone, and that's why these short squeezes haven't been such a crazy concept in the past. Now that retail investors are starting to congregate and come together and put their money to work together in a non-traditional sense, it is truly exposing the market in a way that has never been seen before, which is very, very scary and can completely disrupt the whole marketplace. All in all, I think it's very, very interesting and kind of scary what's going on with these short squeezes. The fact that he says it can derail the entire marketplace is pretty insane. He says that AMC and GME are still at a 100 rating on their website. So the worst is yet to come with these stocks, or the best if you're on the long side. But I am personally scared as an investor in the entire stock market that perhaps this could derail and create another financial crisis. I saw another reporter saying that the same thing was happening with credit default swaps in 2008, which propelled the financial crisis of 2008. And all I can really say is there's still a lot more to come with these short squeezes. It is far from over, and we need to pay attention every Friday, because that's when derivative contracts expire. That's when these gamma squeezes can occur, and eventually this short squeeze will occur. I hope you guys enjoyed the video for you guys today. I enjoyed making it. As always, remember to subscribe to the channel and like the video if you haven't already. And if you check the link in the description or the pinned comments, you can sign up for public, get up to $50 in free stock, and it's basically free money. It's a better platform than Robinhood, so I definitely like it. I hope you guys enjoyed, and peace.